Big news in the market today as Nvidia just reported earnings and the reaction was nothing short of explosive. We're going to break down what those numbers mean, how Wall Street responded, and most importantly, the ripple effect it's already having on Bitcoin and the broader market. So be sure to grab yourself a pumpkin spice coffee this morning, whether it's hot or iced, because I'm breaking it all down for you right now. My name is Paul Sampson, and this is DataDash. All right, folks, as I stated, Nvidia had earnings reports yesterday, and right off the rip, we had this 6% drop to the downside, which honestly, that is a massive move. Even if we saw that in Bitcoin, that would have been a quite an awing move to see unfold in the course of about 15 minutes. But why the drop with earnings actually coming in relatively decent? I mean, the estimates were essentially sky high, in my opinion, beforehand, with the estimate for EPS being $1.01. It came in at $1.05. The revenue was over, with the estimate being 46.2 billion, came in at 46.7. And then the data center revenue was just a little bit below, but what's 0.18 billion amongst friends here? So again, why the drop? Aside from the fundamentals being relatively decent, like I said, that's not that bad of news to come out, in my opinion, to see a reaction to the downside like that based off the news. The only thing I could see is that when news like that does come out, obviously people are waiting with bated breath, obviously, for these earnings reports, and that does kind of incite a bullish jump for traders most of the time. So I would assume that many got into long positions leading up into these earnings. Obviously, maybe even jumped into some new ones in the futures market, at least as the traditional market did close before that report came out. And basically just a little bit of a rinse, right, of trades, because that, my friends, is almost a Bitcoin chart at times. But let's zoom out here and let's take a look at Nvidia in general, right? Because this is a short term. This is the 1 hour chart. I mean, this is honestly, it's not really anything too crazy at the moment. We're trading at $176, which in the grand scheme of things, let's zoom it out, is basically the all-time highs. Okay, so with that being said, looking at the very short term outlook, yeah, it's not that grand on the bigger picture here. But yeah, so I mean, it's a big move short term. It just kind of showcases that the traders in the market just kind of getting washed in the very short term here. What I'm looking for out of Nvidia personally is one of two things here. So this is more of a bigger picture. So I always like to break things down in the sense of the longer term outlook, right? And even though I am a shorter term trader at times as well, while I'm waiting on these larger moves to come, if I wasn't already positioned in something like Nvidia here, as we're going into all-time highs, I understand, that basically the price action can continue higher, of course, and that's just something that I have to be aware of. And if I just had to get a piece of this rally, for me, the risk is just too high of a pullback versus continuation from this exact moment, right? So the times to buy are obviously when we have the big red days, and identifying what big supports are ahead of time is kind of what separates most people at that point. So for me, I'm really not interested in a new entry in Nvidia until we come back to 135, basically in that realm, 140, 135. Okay, I think that there's potential here to actually push higher before we even get a pullback. But one of the two scenarios that I'd be looking for here is a push higher into about basically the $200 range, and then a sizable pullback, which would still be, in the grand scheme of things, a bullish continuation here, right? We've got our lows here. We're putting in substantial highs. We come back to even this region here. It would be a higher low, assuming that that's where we could see a bottom at. And the reason being, if you're familiar with my trading style here, is that this is stacked with horizontal levels of confluence. So this is not something that is subjective in the idea that when you see a trend line or sometimes a simple pattern like a bull flag or an ascending channel or anything like that, so those things can sometimes be subjective, right? Because you can draw that different than I'm going to draw that. The way that I'm looking at things here is I'm looking at exact levels for high volume nodes, essentially, and which is meaning the highest volume areas of a chart that's traded. Their inefficiencies when we have not come back to them yet. That's what's known as the NPOC. It's a naked point of control or an untapped point of control, as well as high time frame averages of price, which are the pivots, PVT. That's what you'll see on the chart there, right? So if you see anything on my chart with an asterisk, meaning that that is untapped, very key region, we have that along with these NPOCs. Not only for a quarter, we have a quarterly NPOC, we have a quarterly pivot, so this is the high time frame average of price from a previous quarter here, also the high time frame average of price from the last 6 months, as well as a 6-month volume target as well. So, and it's all of them come in at the exact same level. So for me, that's where the biggest area of confluence will be. What I'd be looking for in the sense of a next type of entry, as far as the best risk to reward, the best fresh entry is what I usually call it, right? Something where I'm not looking for, you know, even if the price action was to pull up from here and you got in right here, I mean, grand scheme looking back, I mean, is that the ideal area? No. I mean, even is this the ideal area compared? No. But if you could get in this region and we continued up from there, that's the things I'm looking for, right? So all in all, that's the reasoning behind why I'm looking for that 135. I think that there is decent potential to actually push up before we come down and then continue up from there. And once again, this is on a daily time frame. This is more so bigger picture here. But that's what I'd be looking for here out of Nvidia, and to continue this monstrous rally, which has just been quite impressive here. And we may even, you know, make our way up to that 286 level. Continuing up to the upside, right? So big picture outlook there on Nvidia, mixed in with the shorter time frame as well, right? So I don't see us coming down to that 135 anytime soon. More than likely, again, we'll probably push up towards that $200 region. So for me, is the risk worth it to enter now? And again, I'm speaking on the behalf of someone that's looking to enter brand new. And if you're already invested, then amazing. Be aware that we could push up to $200 and come all the way back down to 135, and that still doesn't mean anything necessarily overly bearish, but just be prepared for that. That's a 30% drop. Mind you, that's after over 100% rally already, so these things happen, right? So that's how I'm viewing Nvidia, though. In the short term, relatively remaining around the same. Midterm, probably pushing up to about 200. A little longer, next coming weeks, months. More than likely coming back down to 135 before we continue to make that next leg up. Of course, that could not play out, but that's where I'd be interested in getting new entries at the moment. And then, of course, if it doesn't come, it doesn't come, right? And that's just the way it goes. Before we continue, I wanted to highlight a company that's quite intriguing, and that's Roar Chain Nodes. So here's the deal. Instead of the usual variable yields, Roar Nodes offers a hybrid fee model with guaranteed rewards. Yes, even during the early, slower phases of the network. And that's the kind of stability and predictability that, especially early on, is rare in node staking. But that's not all. You're also earning rewards, helping power a next-gen Layer 2 ecosystem built on Optimism's OP stack, handling transaction validations, data availability, network security, and even cross-chain operations. And the entry structure is quite clever. Node licenses are tiered, which is sold as ERC 721 NFTs, starting around $300 all the way up to $2,000. Each tier offers early access and verifiable ownership with on-chain tracking. What makes it even more compelling is the design of their reward system. It's built for more than just validator income. You also get a share of the transaction fees, staking rewards, performance bonuses, future bridging and DeFi action fees, AI computational rewards, and even NFT marketplace revenue. Early adopters get boosted rewards and exclusive access perks. And if you're into earning crypto in a predictable way while supporting core infrastructure, this is worth a look. It's the kind of aligned, community-driven opportunity that makes DeFi innovation exciting again. So be sure to check out Roar Chain Nodes. The link will be down in our description area below this video. Big thanks to Roar for sponsoring today's video. So at the same time today, we had quite the wick down on Bitcoin right as Nvidia's earnings came as well. Right, we had this big wick down, and then you basically, ate it back up. And generally speaking, I would look to that as a pretty bullish outlook. The only thing is here is that context is key. All right, and for me, I'm looking at a couple of things here, right? So we've got some new information here, and I've got a little Maj Podge here of more local levels. This isn't necessarily a high time frame outlook, but all these key regions right here on Bitcoin is, really what I'm interested in here. So the the question is here is how are we going to tag all these levels if we're going to tag them all in general and get out of here, right? In recent updates, we were looking at this bearish shark harmonic, which is a sequence of Fibonacci's. All right, this has specific ratios, specific targets, specific rules that go along with it. This is a bearish setup that comes up and basically takes the highs. It has 3 specific targets, 1, 2, and 3. all of which have now been slowly met, right, over time. This has been since August 14th down to the 26th, about a 2-week window to slowly grind our way down to these levels. Now, one thing here to be aware of is that, honestly, I was looking at this region as potential for us to kind of come down to, see a pretty decent reaction and start getting a bounce back up to the upside, and looking for at least a run back to 118, if not new all-time highs. I still lean in the direction that we are going to see a new all-time high in the next coming weeks. The only question is, are we going to dip a little further down than this region? So with this setup, more than anything, it's something that when you're trading here, this is how you can utilize this setup. You can't really utilize it ahead of time because this may not pan out and all these things. You can't really go off of when the price action gets to the main targets, because realistically, this should have been viewed as this, right? You come up, we acknowledge this setup, we acknowledge the 3 target zones. So either you're looking for one of 3 things, or one of 2 things, I guess. And if you shorted, these are the targets you look to scale out of that short position. And if you're looking to, deploy new capital, for me, I would have waited until at least here, okay? The only thing is that this isn't the end-all be-all in the sense of this means we just go up from now. You have to look for a new setup, a new trigger, so to speak. And realistically, we could dip down a little bit lower. And really, I really like this 107. We don't have to get it by any means. But realistically, between this 113 and that, it's like a 3% gap, give or take. Really give it a little window here, maybe even 106. But it's like 3 to 4% window here. I do really see a lot of support, a lot of potential coming in here. This is, again, the anchored VWAP, which is the volume weighted average of price, dating all the way back to the $74,000 low. So what I've done there is I've basically anchored a volume average from that position, and that's giving us some key support based on volume. So it's very similar to a moving average, like you look for the 50-day to 200-day, but this is based on volume, right? So it's a little bit different. It aligns with a few other things, and generally it's a really big support, right? So it's a big level. It's just a little bit lower than where we are now. So I just want to point it out there. I think that the overall, my overall bias is still that we will more than likely see a new high before a substantial fall lower. Of course, that could be wrong at the end of the day, but for now, I'm still holding on to that bias. So what that means is that just pulls me into the idea that I'm looking for bounces, I'm looking for long opportunities. I still am targeting more so that 130K to 140, right? So I acknowledge again that we've touched 124, 125, and that's really close to my 130 target, as well as the timing of that. I've been targeting 130 for September. We came to 125 in August of this year. So these are really big time frames that I don't love to get married to the specific timing, because I know that it can be a little off by a month or a couple weeks. So at the moment, that's where my head's at. I'm still targeting higher. I think we could come as low as 106, 107 and still see a substantial rally out of here. The Nvidia news and the way that the market reacted, it was almost a little bit more like a little bull trap, right? So Nvidia news, Fed meetings, those events are really, really focused on because you can see them coming. So everybody gets really, really aggressive around what comes after them, right? And a lot of times we see a lot of fake outs built on them. If we have positive news, you might get a little spike, but then you get a dip overall, or vice versa. So far, once again, maybe I'm not the best person to read that information, but when I look at the Nvidia earnings, I don't see it as ultimately bearish. I feel like that's still incredible to see that company doing so well. And ultimately with that, I feel like people probably are scooping up some new positions here for longs, where I could see just a little bit more of a little dip to the downside. So again, from where we are now, this 110, which is the main target that I've been looking for the last few weeks, and you can see the respect that we put on it so far. Either from here or from this little 3 to 4% window lower, I still am, again, envisioning that this is where we get a little bounce from. And I say little bounce, a sizable bounce. Another reversal back to the upside, make a new high, and then we do the dance all over again, right? We reevaluate and see how the market looks at that time. Now, before we close out, a quick shout out to our channel partner, Roar Chain Nodes. Again, they've just launched their new guaranteed rewards program for node holders. It's definitely worth checking out if you want predictable yield in crypto. Link is down in our description below again. And don't forget, if you want to stay ahead of these market moves with daily updates, live setups, join us over at DataDashPro.com and hop into the Traders Club community. That's where I place all of my analysis, my updates, my academy, and you have direct access to me basically at all times. It's almost like having my personal phone number. Thank you all so much for tuning in. As always, my name is Paul Sampson. This is DataDash, and I'll catch you all in the next video. And until then, everybody, cheers.